Testing, testing. Testing, testing. Test, test, test. Test, 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 test. Test, 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 test. Test, 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 test. Test, 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 test. Over and out. Oh, that was a good one. That took a long time, man. That took a long time. Lencho, good to see you, buddy, with the $5 palm. Good to have everybody in here. Good to have everybody in here. So I asked the Discord if they would be interested in doing one of the candlestick or one of the lessons that we did in the Discord, kind of doing another overview of it. And there was a resounding yes, at least from like 53 people. So I figured we would have some fun while the market is kind of just being like really shitty and kind of like really boring. I thought we would have some fun and do a candlestick lesson in public, available for everybody that watches the stream, so people can kind of get an idea of what we're doing in the Discord. Now, the Discord and the market in general is very, very slow right now because it's terrible out there. Right? Like the price action and the movements everything is just so slow and so horrendous. It feels like most stocks are kind of stuck in mud. So I figured we would take a little bit of a, not necessarily a break, but take a little pause from, spending all day just going over, some of these things over and over and over and over and over, and like the same 13, fucking prices that we've talked about for like the last 2 weeks. I thought we would kind of take a little break and have some fun from that, and do a candlestick lesson and make it free and available for everybody to kind of learn from. This is very similar to the lesson that we have in the Discord. So it'll give you guys a little bit of an idea. I'm also going to give you guys some like little tips and tricks that you can practice using. And then I'm also going to blow your mind on Tesla using those candlestick formations. And then I'll also kind of lead it into chart patterns. And I'm sure that you guys are you'll really fucking like this. I know that you guys will enjoy this conversation. So before we move forward, let's just quickly talk about a couple of things. So SPY to start the week has not really gone anywhere or done anything. You could make the argument that it's actually making a type of candlestick formation right now on the daily that we will talk about. Still 2 hours left before the close of today, so no sense in freaking out about it yet, but just something that we're paying attention to. So SPY hasn't really found its footing so much to start the week. That also includes the Mag 7 stocks here. Mag 7 stocks are all red except for Apple, which is up by literally 66 cents right now. So the market isn't really going anywhere strong. The only thing that has kind of been, I'll say, performing well for us has been the Snapchat ghetto spread that we had. So this was the ghetto spread that we had on Snap. It was 38 for the calls and 37 for the puts. I believe the puts are now trading for like $12. So you're basically minus $25 on the puts. However, the calls were trading at a high so far today of $85. So that's going to net you almost $50 on the call side with a minus 25 on the put, giving you a total profit of $25 per contract set that you took here prior to earnings. So not bad at all, right? Not bad at all. You were hedged on both sides and you found a way to walk out of there making some money. Now, I'm going to hold it through earnings because it's cheap enough, and I'm looking to make a little bit more than $50. If I do ultimately end up losing on this because Snapchat doesn't have a big move, well, boo-hoo, I dusted $75. I've made stupider fucking decisions before, but I like holding it through the earnings. That's just what I'm personally going to do, so that's basically what my focus is. Mr. Oracle, 11 months. Good to have you, buddy. And then one of the other ones that's also been performing well has been Intel. So Intel was up like 5% today. Again, big bounce after that big gap down that it had on earnings. It is stabilizing in this zone above that support level. So I'm very happy with Intel at 19. Haven't done anything with it. No plans to do anything with it. All right. Moving on to some of the small cap stuff here really quickly. Don't have a lot to add because a lot of things haven't moved. IEP, from where we purchased it at that 750, 886 is still doing very well at 872. Other than taking the profit at that indicator target that we had at 884 or whatever it was. Haven't really done anything with the last of the runners. The runners have a stop loss at break even on this thing. So no real breakout or major concern on this thing yet. It hasn't really gone anywhere, but it is looking better. Daily RSI needs to break that center line. Then we kind of need a MACD cross through the center line, which would be really nice. You guys can also see if we open up that MACD, there's not a ton of momentum compared to some of the moves prior during this downtrend. So I'm not getting too excited yet, but IEP looks okay. Outside of that, Corsair had a little bit of a run up towards, 770, but who cares, right? We're trying to get to $8, 950 and 11. So that's, so far a rejection of the center line on the daily RSI, but you'll notice that it really hasn't gone anywhere today. It's literally gone from here to here on today's candle. So no major concern on that end. The last thing that I'm sure you guys are all going crazy about is Wolf. So Wolf right near the highs of the day, currently up 28%. And now since making those lows on the 786 is up officially 100%. Now, obviously, I did not tell anybody to buy anything at that 786 or at this, giant green support level that we had kind of mapped off back from this IPO low here. I will, however, say, though, that last week when we were on Unusual Whales, I believe that was on Tuesday or Wednesday last week. I don't quite remember. But we looked at Unusual Whales, and there was some very interesting floor trades that had actually come in for Wolf. Let me see if we can actually just pull this up and find this here for you guys, because it was actually pretty interesting. Now, let's change the day. So what day was Wednesday last week? That was the 23rd. So let's go to the 23rd and let's see if I can find it. Yeah. So no, is that what we saw? Was this it? Yeah, this was it. So we saw a trader from April 21 and then obviously here on April 23 as well. Look at the amount of money that we caught on the Unusual Whales flow that was just piling into this 4-strike call that was expiring in June. And this trader right here, whoever this is, they are making a metric, they're making a killing. They paid roughly an average of, let's just say, $40 per contract on about $1 million. And they're currently resting at $143 per contract. So this person's up nearly 200%. And those were those Wolf calls that we caught last week. So that was kind of interesting to witness live and to see this big breakout that has occurred since. So might have to pay some more attention to Unusual Whales when it comes to these kind of little micro cap things, because boy, this has been really interesting. Also, I'm just noticing here too, somebody has been buying some very interesting puts that are getting absolutely fucking destroyed. Like whoever this was put $2.5 million on $3 puts expiring on May 30th. That person paid 1.16 for them, and they're currently trading at 0.65. So they're down over basically half of their investment of that $2.5 million. They're down like $1.25 million on those puts. It's almost like somebody knew that thing was going to try and make a breakout. That's actually, dude, we're going to have to keep an eye on that stuff in the Unusual Whale section. It's very, very, very interesting. All right. So, yeah, I thought that was kind of cool that we caught that on Unusual Whales. And now, as far as Wolf is concerned, guys, filling the gap would be unbelievable and possible. It's very possible. And, the craziest thing of it all is, now, again, don't get me wrong, I fucking moved on from this thing because fuck you, Wolf. But that monthly RSI wedge has still never broken, right? It's never broken. You've got the monthly MACD cross below the center line now, right? You've got that monthly MACD cross below the center line there. very close to the end of the month here. RSI wedge still very much intact. I mean, who knows? Maybe the earnings is the thing that really ultimately propels this thing into the fucking stratosphere next week. But boy, Wolf is looking pretty fucking interesting now that it's at this macro golden pocket, right? We're now at this macro golden pocket here on Wolf. So getting back above this level right here, you know, just call it 430 to 515. If you can get back above that, fill the gap, this thing's going to start to look really, really interesting. Then I'll have to kick myself in the dick for being one of those guys who say, well, I wasn't wrong. I was just early. Shut up, Jackie. So, all right. So that's kind of what we got going on in small cap land that we've kind of been paying attention to. LPSN, QSI, Grove, you know, these things just, nothing's really going anywhere. So last thing on the list is GME. But again, I really don't have a lot of things to add about GME right now, given that we just continue to consolidate at this range. Right below 28, above 26. So we're kind of just consolidating in this range. It looks good. You haven't gotten that golden cross to take place yet, but both moving averages are sloping up. So that's a positive, right? You're still above the center line of the daily Bollinger Bands, which is very positive, right? Lots of space in the upper band for the daily time frame. Go over to the weekly. You're still above the weekly center line of the Bollinger Band right here, holding above it nicely to start this week. So no real concern on that end. If we head over to the Ichimoku and we check these things out here, and we'll go back to the daily. So on the daily, you guys can see the resistance that's being provided on that red Ichimoku flip that has taken place since this kind of downtrending price action, right? So the resistance, what we kind of use these Ichimoku clouds for is like, so when you're above them, you look for the green kind of cloud to act as support to push you back up. If you fail below, typically you'll see this kind of flip to red, and that actually happens before these moves. This kind of a little bit more of a complex indicator that I don't want to get too deep on, but basically these clouds kind of act as support and resistance. And you guys can also see, if I turn off the drawings, that the clouds also extend in front of price action, because it's kind of trying to predict price action in the future, kind of, sort of, because like what sort of happens here in this instance, right, is it slipped below the cloud here, but as this was happening, this out front was already flipping from green to red. And then once you flip below that price action, right, then these clouds turn into the resistance that led to the continuation of this little downtrend that kind of began, right? Then you can see on the earnings, we ran into the top of the red cloud, then pushed right back down. And now during this run here, we've once again ran into the top side of that red cloud, but we have the green flip, right? You have the green flip taking place here. So what you want to see in this instance now is price action to break and hold outside and above that red cloud, and now use whatever happens in here in the future with this cloud pushing up and kind of, you know, kind of looking maybe something like this, right? So price action kind of, right? And then finding this now as a new zone of support, right, to then build, to then launch off of. So we're seeing some positive developments take place on some of these other indicators. All right. But again, just as price action stands right now, like we're just kind of in a standstill, right? So it's a Mexican standoff right now. All right. So we're kind of just, we're super chilling for right now, right? We're just waiting to see like what's going to happen with the market, right? And again, my big speculation about what's going to happen with the market is we're probably not going to see significant movement until Wednesday and Thursday's earnings as confirmation as to whether or not the economy is okay. How are the big companies performing? And how does that kind of, I'll say, impact the rest of the performance of stocks within the stock market, right? Because if those Mag 7 are good, then the rest of the stock market should perform relatively well. Whereas if the stock, if those Mag 7 stocks kind of perform poorly, it is kind of a suggestion that perhaps the consumer is kind of pulling back on their spending. And then that's where you could kind of start having that discussion about, okay, well, if the Mag 7 stocks are seeing a potential recession in Q4/Q1, how does that impact the economy? Well, obviously the impact on the economy would be relatively negative, and that's where you can start talking about potential recession. But for right now, recession talk is still way too early because we got to kind of see what's happening with some of the biggest companies performing in our economy. I say our economy like I'm American. I'm not, but you guys get what I'm trying to get at. All right. So that is what we kind of have going on with our market overview right now. So everybody kind of with me so far, folks? Everybody kind of with me, what we're kind of looking at for the market, what we're waiting for, the expectation or anticipation of those earnings happening later in the week. And yeah, so if you guys are ready for the candlestick formation lesson, give me some GGs or TGs into the chat box and let's get this thing fired up. Let's get this thing fired up. All right. All right, so we got Tesla on here, and then we'll pick another. We'll use GME, but we'll use price action from way back in the day. And then we'll kind of show you guys how we spotted some of these reversals and these big moves and et cetera, et cetera, et cetera. And we'll also use the daily on this one as well. And then we'll hide some of these drawings so they're not in our way. All right, good stuff. Okay. Body, is this being recorded? All right, folks. So we will keep an eye on some of the tickers. You know, obviously, if things go down or have big moves up or whatever, we'll keep them on watch here. All right, but for this afternoon, or what I kind of wanted to do to just do for today to kind of go on stream, even while the market is kind of being shitty and boring, was to do an educational lesson on candlestick formations. Now, let me start the conversation or the lesson with this. All right. A lot of people in the stock market, especially the new people or the people who see other people using technical analysis or drawings or patterns or whatever it happens to be, a lot of people kind of overlook candlestick patterns. And the truth of the matter is that candlestick patterns are actually some of the most powerful indicators that you guys can use on the charts. The cool thing about candlestick formations is when you pair it with other technical analysis, whether maybe that's using the RSI or the MACD or moving averages or support and resistance or anything like that, right? When you pair those candlestick formations with those technical indicators that you may also use, candlestick formations can be a fantastic way of finding confirmation of the move that you may be looking for. All right, so here's tip number one that everybody should write down. All right, here's tip number one that everybody should write down. Any candlestick formation, doesn't matter if it's a doji or a bearish engulfing or a tweezer top or a abandoned baby or an evening star, it doesn't matter, okay? Any of those candlestick formations, when they happen at support or resistance levels, right? So let's just say GME, for example, support on GME for us right now, right, is $20, right? That $18 to $20 zone. So if you have a bullish candlestick formation that takes place at that $20 to $18 zone on a macro time frame, the reliability of that candlestick formation increases dramatically. The same thing can be said at resistance. So for us, you know, prior to us breaking it, 26 was resistance, right? So when you have a reversal candlestick formation or a bearish candlestick formation take place at that point of control at $26, it has a statistically much higher reliability percentage than if it occurred in the middle of nowhere price action. So the big thing to write down for this is when you have candlestick formations that happen at clear areas of support or resistance, it adds a significant layer of reliability to those candlestick patterns. Okay? So everybody with me so far on that one? All right. Now, that support and resistance doesn't just have to be lines that you draw, right? They can also come from perhaps patterns, like chart patterns that you draw. They can also come from moving averages, right? Maybe moving averages like the 200 or the 50, where those are acting as support right now, right? So with those candlestick formations, when you have them happen at a support level or a resistance level, the reliability of those increases drastically. All right. So now one of the most common questions that I get asked relatively frequently when it comes to candlestick formations is people say or ask, what is the best / top 10 performing candlesticks? All right, that's one of the biggest questions that I get asked fairly frequently. And today, I'm going to give you a list of candlestick formations that I personally use, that I have used for an extended period of time, that have worked extremely well for me. And we'll see what you guys think about these candlestick formations, but ultimately these are the candlestick formations. I'm not going to put them in any particular order, okay, because there's no real particular order that this thing or that these candlesticks, I'll say, necessarily work in. These are just the best candlesticks that you can find when they happen at those areas when you are looking for them. Right? So at those support and resistance levels, when you see these candlestick formations, once you kind of understand, as we go through this conversation about them, you'll kind of understand what I mean by top 10 performers. Okay, so they're in no particular order. No one is better than the other. But again, listen to how we talk about the context of these things. Okay? So what do you guys think is the number one candlestick pattern that you guys ask me about religiously? What do you guys think is the number one pattern that you guys ask me about religiously? Let's see if the chat box can get this one. Well, I mean, I'm sure that you guys can figure this one out. I'm sure of it. Engulfing, 3 white soldiers. Ooh, there. I see it. I see it. A doji. It's a doji. Is that a doji? What's a doji? Is that a doji? What's a doji? Is that a doji? All right. So the first pattern that we are going to focus on, all right, is going to be called a doji, a doggy. Some people call it a doji. Some people call it a doggy. It don't really matter. All right. Call it what you want to call it. Now, what is, okay, that didn't work the way that I wanted it to. It was way cooler when it was going to work, but now that it didn't work, it's not as cool. So let's try that again. It didn't work again. That's fine. We're going to try it one more time. It's not going to work. That's fine. We'll pick another image, right? We'll pick another image here. Let's try this one and let's see if this one loads up. Nope, it's fine. I didn't want you to load on there anyways, you gigantic dick. Okay, so this is what a doji looks like. All right. This is what a doji candlestick looks like. All right. Now I can find you a couple on the chart and I am going to do that. All right. But this is essentially what a doji candle looks like right here. Okay. Now you will hear people talk about how there are different kinds of dojis. Now, I don't want to confuse you guys too much. So I just want you to understand that this is the most common formation. When you hear people talk about dojis, this is the most common formation that you will see of the doji. Okay. So typically with doji candles, all right, they have small bodies. Okay. So they have a small body. All right, they have small wicks on either end of that body. All right, that's how you spot a doji. So you are essentially looking for candles that have very small bodies and small wicks. Right now in these images, you can see that these have longer wicks. These are just called long leg dojis. It's literally the same thing, right? It just has longer wicks. It can still be a doji. They just refer to it as a long-legged doji. Okay, you guys can actually see it in this image right here. Okay, this is what your regular dojis look like. All right, now, what is the importance of a doji, right? What is the importance of a doji? The importance of a doji is that these signal indecision or indecisiveness. Okay? So why is that important? Right? Why is indecision or indecisiveness, why is that important? When you have a strong trending move to the downside, right? When you have a strong trending move to the downside, and then you start to see doji, fall by another doji, fall by another doji, fall by another doji. Now, I'm making this up here, right? But you guys can kind of see it does something very similar to that right here, right? Doji, 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 right? Doji, 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 okay? So these dojis just signal indecision. And so what that signals is when you see them, now listen to this part very carefully because this is a very important part about dojis. When you see them at the bottom of trends, it is signaling that the bears are being potentially indecisive about what they want to do at this level. And when you see dojis at the tops of trends, similar to these ones right here, okay? When you see dojis at the tops of trends, it signals the same thing, but in the opposite direction, that bulls are now indecisive about bidding price up at this level. Now, when I say at this level, I'm obviously talking about Tesla's chart, but what do I mean at this level, right? How can we determine that there might be indecisiveness or that this could be a good level to long or whatever the question might be, right? Well, if we draw a horizontal line across from this level right here, we make it big and yellow and bold. That's blue. Thank you. If we look over to the left, look at the support that was provided and the resistance, not to mention, at this exact level before we saw big upward swings on Tesla. So when it comes back down to that very same level where we saw indecision and indecisiveness before, this is why, and the reason where, you will see bears start to have those indecisive or indecision doji style candles because they are no longer sure, right? Because you have to think like a bear or like a market maker or like a professional trader in these instances, right? Where it's like, okay, the price on Tesla just went from $380 in basically 2 months all the way down to $210. That is a lot of selling. And at some point, that selling becomes exhaustive. And so if that selling becomes exhaustive, what happens next is indecision or indecisiveness because bears start to question, hey, do we have enough energy to push price through this support level and drive it even lower, even after we've already dropped it $170? And that's where those doji candles form, where they give you that indecision to potentially suggest that there could be a reversal off of this low. This is live. This is not recorded. This is live. So when we use the doji candles at an area of support, then we ask ourselves, is there anything else that we can add that might give us an idea as to why Tesla might have bounced at this level, right? Well, we can look just based on the image that we have directly in front of us, okay? That when we made that first bounce off of this low, there was no doji candle, right? The doji candle that got printed on this low down here was this candle right here, right? There's a doji right there. All right, signaling some indecision. Now, when that doji gets printed, if we open up our indicators, well, we can see that you went from the bear zone here on this low here to then going outside of the bear zone and testing outside and staying outside, right? Perhaps hinting at a very weak touch, a bullish divergence between these two lows, right? Which then ultimately built support off of that support through the doji that we saw, the indecision from bears to be able to blast price through this range, which they couldn't, which then created some bullish divergence, which then created this wedge structure right here. You guys see that? Now, if I hide these drawings, you'll see it a little bit better. Okay. So you guys will see that there was then this wedge-like structure that took place on Tesla right here. And that bullish divergence at that support where that doji was printed, right, then gave us reason to think that this could make a little bit of a bullish breakout. And lo and behold, the bullish breakout happened from the doji candle low here, right, and propelled us into that high. Now, that high ultimately was, now this is where some of those other lessons where we kind of like zoom out and look at these things, right? That high that was made from this doji and this breakout was just a lower high. And these lower highs then led to that big, huge dumpy on Tesla. Okay? And when those big dumpies happened on Tesla, guess what got printed at these highs, folks? Yes, you are correct. Those are dojis. That's a doji. That's a doji. That's a doji. All of those happening at these lower highs from the macro. And these three highs all had 3 touches of bearish divergence, which then propelled Tesla down. And so we use those candlestick formations at areas of support and resistance alongside of trend to help us potentially identify these reversals or continuations taking place. So let me pause here and ask the chat box, does that whole kind of concept of how we approach dojis, where they come in, where they happen, and how we can use that information to try and develop a potential thesis, does that make sense, folks? All right. So far, so good. All right. Indecision at the bottom / tops of trends. So it is bearish at the tops of trends and bullish at the bottoms of trends / trending moves. Good enough. All right. So that is doji. All right. That is doji. Now, what do you guys think is the number 2 set of candles that you guys ask me about religiously? You guys did already say it once in the chat box before. You guys did say it once in the chat box before. Let's see if you get this one. There we go. Yeah. There you go. Well done. Number 2 candle is bullish / bearish engulfing candle. All right. So what is a bullish / bearish engulfing candlestick formation? Well, I pulled out a couple of examples here for you. All right. I pulled out a couple of examples here for you. Now, this first one that we're seeing on Tesla. Okay. So I'm going to zoom in here so you guys can see it all proper and shit. All right. So this first one that we have on Tesla right here. Okay. So what is a bullish engulfing candle? All right. So with a bullish engulfing candle, what happens with these, all right, is you look for these, all right, as a way to seek the continuation of a trend or the way to seek a reversal of a trend. And again, I'm going to put this into context for you. All right. So in this instance here, Tesla had spent a long time going down, right? We actually just monitored that price action there, had this big trending move down. All right. So with that big trending move down, we then had printed, first of all, one of the candlestick formations that we just spent a couple of minutes talking about with a doji right here, right? A doji at the bottom of a trending move, question mark? Ooh, a potential bullish reversal sign showing up on the charts. But then what happens the next day? Well, the next day prints a bullish engulfing. So what's a bullish engulfing? Well, a bullish engulfing is where the candle starts on a gap down on the next day. All right. And then it closes green on the same day. Not only does it close green though, but in this image you guys can see here, the body of that candle for the next day must completely encapsulate the body of the prior day. Okay, so when we look at this doji candle followed by the bullish engulfing, the body of the candle is just this little bip here, right? And then you guys can see the next day, we started on a gap down on Tesla all the way down here at 102, and then we closed all the way up here at 113, giving you a candle, a body of the candle that completely engulfs the prior day's candle. That is a bullish engulfing candle. Those bullish engulfing candles suggest that buyers, right, have, what's the word I'm looking for? That buyers have essentially soaked up everything that happened yesterday and then have actually driven price higher than its highest open or close of the day prior, suggesting that bulls have kind of like taken over or like overwhelmed. There's a good word, right? They've kind of overwhelmed all of the selling or the price action that we saw yesterday. So typically it is a bullish sign, right? It is a bullish signal to see a doji followed by a bullish engulfing at the bottom of a potential trend. Now, what could tell you that this might be a bottom, right? Well, this is where you open up your indicators again, right? And we see that if we opened up the RSI in this instance, all right, we can see that from this low here to this low here, well, that's this low here to this low here. That's bullish divergence, right? Big touch of bullish divergence with a doji followed by a bullish engulfing. That right there is basically a bat signal trying to say, hey guys, there might be a reversal taking place. Look, 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 look. Right? So that bullish engulfing candle happening at the bottom of a trend following that doji was very suggestive that buyers were about to step in and try to drive price back up. All right. Now, the same thing can be said about bearish engulfing candles. All right. So bearish engulfing candles are basically just the exact opposite, right? They are basically just the exact opposite, where the body of the bearish candle completely encapsulates the body of the prior day. So this right here is a good example. All right. So once again, you guys see a doji at the potential top of this trending move here. All right. So we've got this trending move here, right? Came all the way down here up to here, right? And then you've got this doji here. And then look at the candle that follows it, right? Candle starts with a gap up and then closes below, right? Completely encapsulating the body of that prior day. So this would be a bearish engulfing candle following a doji at the top of a trend, suggesting a potential reversal. And then that's ultimately what you saw after that candlestick formation, right? Now, this looks like a small move, but look at that, right? 24, 25%. So that's all those candles are, right? So when you look for those candles, the bearish and bullish engulfings, you can look for them at the bottom of trends for bullish reversals, or the tops of trends for bearish reversals, or you can look for the bullish engulfing candles to happen within uptrending moves, right? So maybe a bullish engulfing candle gets put in here, or maybe a bullish engulfing candle gets put in here, right? Kind of seeking the continuation of those bullish trends, right? Same thing for the downside, right? When you have a downtrending move, you look for those bearish engulfing candles at those highs to seek the continuation of that downtrending move. All right. So everybody with me so far? Everybody with me so far on the bullish and bearish engulfing candlestick formations? Everybody with those so far? Completely encapsulates the prior day candle. Good at tops of trends for bearish engulf, and good at bottoms of trends for bullish engulf. All right, there we go. Okay, so we've now got two of our favorite chart patterns that we like to trade fairly frequently, all right, with these. Now, what do you guys think is a pattern that happens with these two candlestick formations fairly frequently that we talk about almost every single week? These are a type of chart pattern that we talk about nearly every single week. Let's see if you guys can get this one. It starts with an I. That should just give it away. Oh, I think the chat box died. I think everybody died. Oh, okay. Yes, that is correct. The next one that we are going to do is going to be inside bars. All right. An inside bar happens when the next day's price action stays completely inside of the prior day's price action. All right. So what does an inside bar look like? All right. Inside bars are awesome. These are some of my favorite patterns in the entire stock market to trade, folks, because they have a very, very, very specific set of rules when it comes to those inside bars. Okay, so check this out. We got one right here. So what is an inside bar? All right. An inside bar is when the next day's price action is completely inside of the prior day's price action. So if we go back on Tesla, again, I'm loving using Tesla here as a reference. If we go back on Tesla here on this Tuesday, October 10th of 2023, we made a high of 268.94 and we made a low of 257.65. And then the next day's candle stayed completely inside of both the high that it made and the low that it made. This is known as an inside day or an inside bar. All right. And it's where price action stays inside of the prior day's price action or candle. Okay. So in this instance, we made this high on that Wednesday. Okay. Marked off in green. All right. And then we made this low on that same Wednesday's price action, marked off in red. So inside days seem relatively simple, right? Inside days seem relatively simple, but how do you trade them? Right? How do you trade them? Yes, including the wicks, Tom Zock, yes. Yes, including the wicks, yep. So how do you trade an inside bar? Well, this is where it becomes really, really fun and really, really easy with inside bars. And I'm going to show you guys a couple of different examples here because this is really cool, okay? So with an inside bar, very simple. You guys can see we marked off the low with a red line. We marked off the high with a green line. The reason I mark it off in green is because if you break the high of the inside bar, it is said to be making a breakout to the upside. When you break the low side of the red trend line, right, the low side of that inside bar, it is said to be making a trending move down. You are breaking down. So as a trader, what you do is you look for a break of either the upper trend line or the lower trend line of the inside bar. And when that trend line is broken with a candle that has a body close underneath it, it is said that that inside day has been broken, and you look to trade with the trending move or the break that is taking place. So for example, in this instance, trader would have been looking to long off of a break of that inside bar high, and another trader would have been looking to make a short on the break of the low side of that bar. All right. Now, with that inside bar, you guys can see on this instance right here, right? We had the inside bar, we marked it off. You broke the red trend line with a body close on this candle here. Spent a couple days consolidating below that range, right? You spent some days, 2-3 days below that range consolidating, and then slip and dip, right? Now, check this out, right? Because this is where these candlestick formations become really, really fun. And especially drawing or doing this little practice kind of charting, right? Look at this. You printed an inside bar right here, right? Because you made this high here, right? Drag that across and we'll make that green, all right? And then you made a low right here. Okay, we'll mark that off with red. And you guys can see that the next day's price action stayed completely inside of that day, right? So we had an inside bar right here. And then look at this. Candle closed, it broke and closed above it, right? So it said to make a breakout. Now, again, it is not a huge breakout because we are on the daily, right? And you guys can see that, you know, it's kind of trying to fight a more macro downtrend in this instant, but it doesn't matter, right? Some traders like to trade those swing or day trades. They say, hey, that's a break, right? So they look to long and look at that. Got a nice 1%, 2% move out of that. Now, again, it's not much, right? But that's how you got the confirmation of that little breakout move to the upside. Now, again, we can keep doing this, right? Look at this one right here. You made this high right here, okay? You made this low right here. And then you guys can see that the prior day's price action right here in this candle right here was completely inside of that bar, right? So we marked off the high, we marked off the low. You got the candle to close above that inside bar breakout. So it said to make a breakout. Comes back tests that range, and then look at the move that was made from this breakout, right? You can measure it from here if you want, doesn't matter. 5.75%, right? And that's again on another inside bar breakout, right? Then you've also got, look at, we can do this all day. Look at this inside bar right here, right? You've got your high there. You've got your low here. Now, this is a very unique thing where this is actually called, now, call it what you want, okay? But a lot of people will refer to this as a double inside day, okay, where you have this candle here, all right, this purple candle that I can't really draw on because I'm really, really zoomed in. This purple candle here, followed by this gold candle here that is completely inside of the prior day price action. You guys can see that, right? And then the next candle that follows is also inside of the prior day, where it doesn't break the low, it doesn't break the high, so it too is also inside of that range. So typically when you have the double inside days, traders love to trade these ones. All right. The reason that they love to trade these is because typically when you see multiple days of consolidation behind one or two candles worth of ranges, the breakout or the breakdown is said to be relatively aggressive. You guys can see in this instance here, right? We broke that inside bar on this gigantic gap up, right here. And you opened right here. So if it didn't come back and back test, you guys knew that this was going to be a breakout. And look at the size of the move from where that candle opened to the high of that move, 5.6%, right? So traders love to trade these inside bars, especially when you start seeing multiple inside bars, because it just suggests that there's a lot of consolidation that is taking place and that the next move coming is going to be a big potential breakout or breakdown. All right. So everybody understand what the inside bars are so far? Just give me a quick GG or TG if you're with me so far. How many people are watching? I have no idea. Oh, wow. 460. All right, and SPY making a push right back up. So don't forget about that indicator target that I told you guys that I have for 550.48. I think I told you guys 550.48. Where I've got that indicator target, I believe 550.58, somewhere right in that ballpark. But good bounce and recovery so far on SPY. Good bounce and recovery from the lows of the day on SPY. It's not really dragging a lot of things up with it. Couple Mag 7 stocks turned back green, but nothing of real significance. Snapchat continues to haul ass, so that's really, really good to see, especially for that ghetto spread that we have on. It's looking really good. All right, so let's see. Everybody kind of with me so far on the inside bars and whatnot. Okay, great. All right, great. Vincie Elliott, I don't disagree with you, my man, but nothing I can do. Nothing I can do. All right, so let's do number 4. So what should number 4 be? Let's see here. Let's see. What should we pick? Okay, yeah, that's a good one. All right, so number 4, I won't ask you guys for this one. This is just one that we have done relatively recently. All right, this is one that we have done relatively recently. This is a dark cloud cover slash okay, because dark cloud cover is not technically also bullish piercing, so I don't want to confuse you guys too much. So let's just do dark cloud cover, and then we'll transition that right into piercing candles as well. All right. So what is dark cloud cover? Dark cloud cover starts with a gap up above the prior day close, and then closes below 50% of the prior day's body candle. All right, so that sounds confusing, but don't worry, we're going to make it really, really easy to understand here, okay? Dark cloud cover. All right, what does dark cloud cover look like? Now, let's see if I can pick a good one for you guys to use. Now, I might have to switch it off of Tesla, because I do know of one that did one, I think somewhat recently, which was, I believe it was NVIDIA. I could be wrong about that, but let's just quickly double check here. Or was it Microsoft? It was one of these ones here. Let's give me a second to find it for you guys. Okay, there we go. There's a good one. All right. So what is dark cloud cover? All right. Dark cloud cover. Perfect. Hopefully it'll let me put this on here. Yes, perfect. All right. So dark cloud cover, guys, very, very easy. Understand this, all right, before we even jump into this discussion about this particular chart candlestick formation, okay? These candlestick formations only work as reversals. If you are not using this candlestick formation as a reversal, it's not going to work. So the reliability of this thing is like low, 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 low if you're not using it as a reversal, right? Now, that reversal can be short, it can be long, it can be medium, it doesn't matter. You're just looking for a temporary reversal in price action, which can sometimes lead to more macro reversals, all right? So what happens with dark cloud cover, you guys can kind of see in the image here, right, is where you have a bullish candle, right? And the close of that bullish candle the next day or the next day of price action will start with a gap up. All right, so it starts on a gap up. It looks super, super bullish. And then by the end of that day, that candle starts to form what looks like almost a bearish engulfing, except it doesn't completely engulf the candle, right? So remember with those bearish engulfings, we need the body to completely encapsulate the prior day, and it doesn't quite do that, right? But what it does do is the body of this candle closes lower than 50% of what this body is, all right? So what I like to do to just measure 50% is pull a fib from the high of the body to the low of the body, all right? Then take a trend line and just mark it off at the 0.5 Fibonacci because that's 50%, right? And then I'll just quickly remove that. So that green line marks off 50% of that day's candlestick. And so you guys can see with this dark cloud cover, we started on a gap up, right? And then we closed below that 50% threshold on that dark cloud cover candlestick formation tolerance, all right? So basically it is a bearish piercing candle, which we're also going to talk about here briefly. So what you're looking for is when it starts on a gap up, right? And then it actually closes red. And not only does it close red, but it closes below 50% of that prior body of the candle. All right, so it looks like a bearish engulfing, but it's not quite. All right, and these dark cloud covers are specifically used for reversals. All right, so does everybody understand that one? I know that one's a little bit trickier to understand, but do you guys, like, does that one make sense, folks? Do you guys kind of understand that? I'm just going to keep taking a moment here to pause and make sure that you guys are kind of all with me so far. All right. All right. All right. Good, good. Okay, good. And again, if you have questions, don't be afraid to ask them. I'm sure there's lots of other people that probably have the same questions that maybe are afraid to ask me because they think I'm scary. So don't be afraid. Don't be afraid to ask questions. I'm very happy to answer them for you. All right. So next one on the list of patterns that we are going to be paying attention to. All right. Next one on the list is going to be called piercing candles. All right. Next one on my list is going to be piercing candles. Piercing candles quite literally look exactly the same. The only difference is that bearish dark cloud cover has to be bearish, right? It has to be at the top and then signal a reversal. Whereas the piercing candles, right, also signal reversals, but there are such things as bullish piercing candles. All right, so a bullish piercing candle, you could make an argument here. Let me find you guys one here, kind of an example. Let me pick let's see. Maybe NVIDIA had one here recently. Let's see here. I mean, you can make the argument that this is one. So maybe that's what we'll use. We'll use this one. All right. So in the same way that you build dark cloud cover, right? In the same way that you build dark cloud cover and what we just looked at on Microsoft, it is now the exact opposite for a bullish piercing candlestick. All right. So with a bullish piercing candlestick, let's actually use that exact same image because I saw it right there. That's what I'm looking for. All right, so with the bullish piercing where did we go? Oh, I pulled this one. There we go. Oh, and I don't have the drawing stirred on. Okay, and that picture didn't work. Okay, that's fine. So with the bullish piercing candle, right, what happens is the exact same thing as dark cloud cover, but it's the opposite. So you have a bearish candle, and then the next day starts with a gap down. All right, so if we look at NVIDIA, bearish candle, next day starts with a gap down. It starts all the way down here, right? And then it recovers and turns green and closes green. But not only does it close green, but it closes over 50% of that prior day candle. So it almost looks like a bullish engulfing, right? It almost looks like a bullish engulfing, but you don't quite entirely cover the prior body candle. So what this is when it closes above that 50% threshold, it is now said to be a bullish piercing candle. These bullish piercing candles offer reversal formations. All right, so you guys can see in the image here, right? Starts on a gap down, closes green above 50% of the prior day candle, and then look at the reversal that takes place afterwards, right? So in the same way that you look for dark cloud cover to present bearish reversals, you can look at piercing candles to provide those same reversals, right? A bearish piercing candle is quite literally just dark cloud cover. Some people just call it other things, right? But it is quite literally at the core of it, it is a bearish piercing candle. And when you get the bullish piercing candles, you look for those bullish piercing candles to lead to a reversal. And then look at the reversal that you caught on this one here with NVIDIA, right? So it closed here. So let's just say that you longed it here, right? Yes, it did go down a little bit, but look at the big move that it made back up, right? 17.5% on that bullish candlestick formation that was made right here, suggesting a potential reversal on the share price of NVIDIA. So pretty cool to see those candlestick formations ultimately continue to work out, right? And it's pretty cool to see how those candlestick formations in combination with some technical analysis or maybe some moving averages or, you know, whatever it is that you happen to use on the chart, it's really cool to see how these things function looking back on them, right? And so what's cool is we're also going to spend a quick amount of time before the end of the day just going over a couple of charts that we're currently like paying attention to and looking at the candlestick formations that they're in. And then you guys can kind of make like your own, theories or thesis about what you can expect with some of those to take place. And maybe we can come back and look at these later in the week and see how they ultimately performed based on some of the things that you guys were looking at and thinking about. So I thought that would be kind of cool. Lukenbacker with the 10. Thanks a lot, buddy. Appreciate that. Would you say the dark cloud is market finding the top and people taking profits, leaving a blueprint for a turning point to the downside? Possibly. Yeah, for sure. Possibly. But I don't know that the candle necessarily like it's difficult to say, but yes, for sure. It definitely could be. And yes, SPY is making a big pop. Yep. SPY is going to go to that indicator target back at 550. Just call it 550.50. It's probably going to go right back here. That's my guess. Again, you found support on that macro 382. Right? Very, very important. So, all right. So, everybody with me so far, guys? Is everybody with me so far? If you're still here listening, can you just hit me with a GG or a TG? I'm not sure if people are still watching. I don't have my phone with me, so I don't know if you guys are watching. And then just looking at a couple of stocks, man, other than Wolf up 23%, I mean, most of the small cap market is like stuck in mud right now. Mostly everything is just super fucking chilled out. Not really seeing a lot of hard movement across the board. So, oh, and there's our famous FFAI. Fuck you. All right. Good. All right. Lots of people still in here. Okay, good. Let's see. So now some of the candlestick formations that we're going to get into. Okay, some of the candlestick formations that we are now going to get into are a couple of the more, I'll say, obscure candlestick formations that you don't see a ton of people use. But these are candlestick formations that I have personally used, that I have had a lot of success with. All right. And that I personally know work extremely well. Okay. Now, the first one is one that you will hear people talk about very frequently, but they don't use them correctly. All right. So this is one of the biggest candlestick formations that people use incorrectly. All right. And that is going to be number 6, the hammer / inverted hammer candlestick. All right. So, a hammer or an inverted hammer. So, they sound exactly what you would think they look like. All right, where they actually look like they form kind of like a hammer, right? Where they have kind of like a little bit of a smaller body and a long wick behind it, right? Giving the appearance of a hammer. Okay, now I'm about to tell you some incredible secrets about these hammer candles that nobody's going to teach you about. So make sure that you got your pens and papers out. Make sure that you write this part. And if you write nothing else from these streams for today, make sure that you write this part down, because this is really, really important, because these are great patterns, right? These are actually really good patterns, but people often use these incorrectly. So I'm going to give you some little tips and some tricks on how you can find and use these to the best of your advantage. All right. So tip number 1 on the hammer. All right. Whether it's an inverted hammer or a regular hammer. Okay. When you see these hammers, you want no wick on the other end. 0. When I say no wick, I genuinely mean no wick. I don't even want like a 1 penny wick on the other side of that hammer or the other side of this inverted hammer. I don't want one little micro wick. Those little wicks on those hammers destroy performance. They hurt performance beyond what anything should be reasonable, But that's just the truth about these hammer candles. When you have even just the smallest little micro wick on the other side of the hammer, the performance of these things drops significantly. Now, with these hammer candles, these are excellent reversal candlesticks. When you have inverted hammers on the lows, they're great for bullish reversals. And when you have hammer candlesticks at the top, they're great for bearish reversals. So let's talk about how you can use these candlestick formations, where they take place, and then how you guys can use those, all right, to your advantage in determining potential reversals and how you can actually measure moves off of these hammer candles, because hammer candles are actually one of the very few candlestick formations that you can actually make a measured move off of. Okay, so let me show you an example here. Now, let me just find one. We'll do this all in real time, right? We'll find one here together in real time. Let's see. Oh, actually. Okay. So, let's see here. I want a really good example. Maybe we'll move off of Google and let's try Apple, and let's just see if Apple had anything interesting take place. I'm kind of looking for a little bit of a bigger one because I want to really show you guys kind of like how you mark these measured moves on these things, because it's actually really, really useful. But as it stands, I'm not immediately seeing one. So let's head over to SPX and let's see if SPX printed any off of these lows or anything like that. Back during these trends, I am on the daily. Nothing. Fucking rare candlestick formation to see, dude. Holy cow. Especially for like big. Let's see. I'm looking and waiting to see if I can find one. But it is proving difficult. Maybe Meta had one when it made that bottom way back when. All right, I'm looking, folks. I'm looking. Okay, perfect. Here's a little one. It still even has the little wick on the end of it. I don't like that. That's not what I want. It's not what I want. Let's maybe go into smaller time frames then. Let's do this because I know that we can find those, because that'll be easy. So let's see. No. Okay, there's a decent one. All right, so again, it has a small wick, but because I'm already fucking annoyed, we're just going to use this one as an example, all right? So it has a small body, right, with a large wick on the upside, all right? So this is what an inverted hammer looks like. Now, typically, you look for those inverted hammers on the bottoms of trends, right? That's what people have often been told, is to look for those inverted hammers off of the bottoms to identify those potential reversal in trends. Well, I'm here to tell you that inverted and regular hammers essentially work in the same way. And the cool thing about these is that you can use these as a form of measurement. So when you build a hammer candle and you think that there is a reversal taking place, the way that you measure these is by actually taking a trend line from the bottom of the body of that candle to the high of the wick, and then taking that and then placing that at the bottom of the hammer. And that is actually how you measure profit targets off of those potential reversals. So you guys can see how if you had one that took place on a much larger time frame, with a huge a big wick and a very small body, you could see how that could lead to some really significant reversals, right? So very, very cool. Actually, I'm just noticing this on Meta. It's very cool to look at some of the candlestick patterns that we just spoke about and how they have performed, right? Look at the dojis that were printed here, right? Followed by a bearish engulfing candle at the top of this trend that made this big reversal, right? And then look at the bullish engulfing candle that got printed at the support level before this nice reversal, right? Then look at the big bearish engulfing candle that happened here, right? And then look at the inside bar that you kind of broke from over here, right? Right here, right? Look at this inside bar, right? And then you broke the low, and then look at the reversal that took place here. Very cool to see some of those candlestick patterns that we have just spoken about on this 30-minute time frame on Meta, seeking the moves or the movement within this trending move that happened here on Meta. Now, here's something very, very important that I want all of you guys to make sure that once again, you write this down for future reference, okay? Make sure that you write this down. Candlestick patterns can be used on every single time frame. Every single time frame. These candlestick formations can be used on the 1 minute time frame. They can be used on the 5 minute. They can be used on the 15, the 30, the 45, the 1 hour, the 2 hour, the 4 hour, the daily, the weekly, the monthly. It don't fucking matter. Those candlestick patterns can be used on everything. The thing that you have to remember, right, to put into context is the smaller the time frame, the less reliability. Okay? The smaller the time frame, the less reliability. Okay, so just keep that in mind. If you were using, I'll say, candlestick patterns on the 1 minute, it's not that they don't work. It's just that you want to use a bunch of your other technicals to kind of help give you a bit of an idea of where you can expect price to go or break out if that's what you're thinking based on candlestick formations. You want to add more layers of reliability, right? So, you know, for example, on these lows over here, right? If let's just switch this to the 5 minute quickly and I'll show you. On these 5 minutes here, right? These were all bullishly divergent touches. So you had two touches, arguably three touches of bullish divergence on the 5 minute time frame. And then as you started to kind of bottom out on this low, you'll see here there was a bullish engulfing candle on the 1 minute that took place right there. All right. And then you kind of had some inside bar action, right, where you did break it with some of the wicks, but you never actually closed below. Now, let me just draw this so you guys can actually fucking see it. All right. So this is what I mean by kind of some inside bar action, right? So we know that in order to signal the breakdown or the breakup, you must have body candles of those closes taking place below or above those inside bar lines, right? So we had this big bullish engulfing, and then this candle happened right here, which was an inside bar. So we're looking for a body candle close above that green line or below that red line. We did have a wick, but no close, and we did have a wick, but no close, right? And then the next candle that happened that was a breakout above that green line closed above it, right? Signaling the reversal, right? Candlestick formation, bullish divergence, breakout. And then look at the movement that has occurred since that moment, right? And that came off a bullish engulfing, followed by an inside bar. And then we marked off the high, marked off the low, and looked for a body candle close to give us the signal for a breakout. And now look at it go, right? Bullish divergence, 5 minute time frame, candlestick formation, bullish engulfing, inside bar, mark the levels, boom, boom, breakout, easy peasy, right? So does everybody kind of understand how you can use those smaller time frames and use those divergences and use those other technicals that we have at our disposal to kind of build a general thesis as to what you can kind of anticipate taking place on price action? Does that make sense, guys? And again, I apologize for stopping so many times. It's just I want to make sure that we kind of just like drill this into your guys' heads, right? I want to make sure that this makes sense. And if you guys have questions, like I said, don't be afraid to ask them, because I'm going to answer them for you. No questions asked. Even if you think they're stupid, I don't care. I'm going to answer them for you. All right? Okay, so we have kind of gone through the majority of the I'll say big dog candlestick formations that I mostly pay attention to. All right, so the move by using the wick of the hammer. All right. So the next couple of patterns that we're going to talk about, folks, all right, the next couple of patterns that we're going to talk about briefly here, all right, are going to be a couple of patterns that, again, I just spoke about this. They're not going to be frequently used all that often, but when you see them, they are really fantastic patterns. Okay, so it's only going to be, I think I have two more for you guys. I think I have two more. Yeah, so I have two more for you guys. So the next big one that we're going to talk about, all right, the next big one is going to be 3 white soldiers / 3 black crows. All right, so these are 3 consecutive bullish candles with full bodies. All right, and then the opposite one for the 3 black crows is 3 consecutive, bearish candles with full bodies. Now, again, let me show you some examples of this first here. Okay, 3 white soldiers, bullish. So this is what a 3 white soldiers candlestick formation looks like. Okay, where you have 3 consecutive, relatively full-bodied bullish candles. Now, another thing that is somewhat important about these, all right, another thing that is somewhat important about these things, just so that you guys are aware, is with these 3 white soldiers, typically, as they make the 3 white soldiers, the next day must open up inside of the prior day price. So you guys can see we closed here, opened here, closed here. Opened here, closed here. So you guys can see that it closes inside of the prior day's close, right? So technically starts on a gap down and then closes big green. Starts on a gap down, closes big green. That's 3 white soldiers, all right? Now, 3 black crows is quite literally just the opposite, all right? Same exact concept, except it's just to the downside now, all right? Now, with those 3 black crows, okay, with those 3 black crows and the 3 white soldiers, those 2 patterns specifically act as reversals, nothing else. These do not act as continuation. These do not act as a breakout. These are straight up a reversal candlestick formation that typically takes place. So you look for 3 black crows at the top of an uptrend, and you look for 3 white soldiers at the bottom of a downtrend. All right. So let's start with whatever the first one is that I could find. Let's see here. I'm sure that we're going to see one here relatively soon. All right. Well, it's not. I want to kind of. Oh, that's another lesson for another time. Let's try. I'm trying to think of something that did one somewhat recently. Okay, here's a. Not really. Okay, here's a decent one right here. Okay, here's a decent one right here. All right, so we're zooming in on Google. Google, this is the bear market here of 2022, right? This is the bear market of 2022 here. Now, as Google is making these 3 higher lows, of potential 3 rising valleys, right? Giving us a potential reversal out of that bear market. If we zoom in on the final valley of this pattern or structure that it was making here, you guys will see, all right, that you make one full body candle here. The next day opens up inside of it and then closes with another full body candle here. Then the next day opens up basically at the same opening price. That's fine. And then closes way up here, giving you 3 consecutive full bodied candles, giving you those 3 white soldiers, very similar to what you see in the image here. Those 3 white soldiers took place right near the bottom of a full years-long downtrend on Google before ultimately being basically what ended up being the final bottom on Google before this thing made a rocket launch off of those 3 white soldiers, right? This is where the end of that 3 white soldiers pattern took place. Look at that, 90% on Google from the conclusion of that 3 white soldiers pattern on Google on the daily. So when you find these 3 white soldiers patterns, you are looking for these things at the bottom of downtrends. And then when you look for the 3 black crows, you are looking for those at the tops of uptrends. So I was hoping, there actually is one on Google right here. So again, Google had this multi-year uptrend after COVID, right? Made this huge recovery after COVID. And then it started to have some hesitation on these highs right here, right? Kind of topping out on these highs here. And then as it's making this massive reversal into these new lows, right? Check this out. If we zoom in, look at this. All right. I lost it. Where did we go? What the hell happened? What the hell happened? I just fucking had it. Fucking stupid son of a bitch. Oh, there it is. Sorry, my apologies. So we had those lows where it kind of started to top out, right? And then it starts to make that reversal. What was the confirmation of that reversal? Well, check this out, right? Now, this is where all of our technical analysis is going to come into play. All right, check this out. Check this out, because this is so cool. So we draw a trend line across these lows, right? And the reason that we draw a trend line across those lows is because we can see that once we kind of peaked out at the end of 2021, we made a retracement and bounced off of this once really significantly. Then we bounced off of this again pretty significantly, bounced off it again pretty significantly, and bounced off it again for the 4th time pretty significantly, but never broke these highs. So that's why we were kind of concerned that things looked a little bit bearish. So what was the confirmation of this trend breaking down? Well, looky here, folks. On the breakdown of that trend line that we just marked off, look at what took place. You have one bearish candle. The next one opens up here, closes full body lower. So that's a second black crow. The third one opens up inside of the prior day price and closes lower, giving you, look at this, 3 black crows right here as you broke that important supportive trend line. And then once those 3 black crows had taken place, the bottom of that 3 black crows, there was only 1, 2, 3, 4, 5 days that closed above the end of that 3 black crows pattern before this thing ultimately saw another 30% sell-off over the next 200 days following that 3 black crows breakdown of that supportive trend line at the top of that bear market before we broke completely down. So pretty cool to see those patterns take place at those areas of support and resistance, giving you the confirmation of those trending moves. So do you guys see how those chart patterns can give you the confirmation of those trending moves that perhaps you are looking for in the moment? Does that make sense, you guys? You guys kind of with me on that one so far? And again, I'm only going to ask 2 more times if you guys follow along with me, because we're really close to the end. So stay with me. Just say something in the chat box if you're alive. Nobody said anything for like 2 minutes. I'm not sure if you guys are alive. Are you alive? Are you there? Sorry, too technical for a random viewer, Jack. You love your channel, but I have to be honest, it's a bit dry for me. That's okay. Yeah, but look at Jimmy now. Wow, it's went up 6 cents since we looked at it 30 minutes ago. Holy shit. What's going to happen when it goes up 16 cents? We're going to collectively shit our fucking pants. So SPY got to that target that we marked off there at 550.48. So 550.48 achieved. Lock in all longs. All right. All right, good. So last set of patterns that I'm going to set up for you guys, or that we're going to kind of talk about, okay? So this will be 8 and 9. So number 8 is going to be evening/morning star. And then number 9 and last on the list is going to be abandoned baby. And no, that's not a joke. That's a real chart pattern. So the reason that I'm finishing off with these two is because they are very, very, very close to one another. All right. The patterns of these are very close to one another. But I'm going to put these up side by side for the chat box. I'm going to see if you guys can figure this out. So let's see if you guys can spot the difference. All right. So there's those, and evening/morning star pattern. All right. And then here is the evening/morning star pattern. So I'm going to flip between these two screens, and I'm going to see, or I'll ask the chat box, can you guys spot the difference between these patterns? The evening and morning star versus the abandoned baby. Evening, morning star. Abandoned baby. Does anybody see the difference between those two candles? Oh, very good, Zmaz. Very good, Zmaz. Candle Clown, Nutfilled, Body, Fusion, Tag, Harley, Cygnus, Cruz, Jacob, Yakiv, Lelio, De Felice, Jesse, and Ricky, and Melinda, and Forrest, and Chan. Excellent. Yes, guys. The abandoned baby formation, all right, and the evening star formation both use 3 candlesticks to make the pattern. Both of them have a doji as the secondary candle. All right, both those patterns have a doji as the secondary candle of those 3 candlestick patterns, okay? The difference between the two is on the evening and the morning star, the candles actually connect, right, from wick and wick to the body of that doji. Same here, right? Whereas if you look at the abandoned baby, the wicks, they do not touch the doji candle that is created, leaving a gap in space between the 3 candles, both bullishly, right, and bearishly. So you guys see the gap that's left here and here versus the no gap left here and here? That is the difference between those 2 candlestick formations. Okay? Both of those candlestick formations, both very good for reversal of the trend. Okay? So just keep that in mind. When you are seeking a potential reversal of a trend, okay, evening and morning stars and abandoned babies, both bullish and bearish, are really, really good for reversals. All right, so here's an example of a morning and an evening star reversal. All right, so here is here's a evening star reversal, for example. Okay, and then here is what a morning star reversal looks like. All right, so here's your morning star right there. Right, and then off you go. Nice reversal off of that. Okay, so Now let's talk about some real world examples of those two patterns. So let's start with the one that I already have on the chart here set up for you guys. All right. So I have an abandoned baby right here, and I'm going to show you guys what this pattern is all about right here. Okay. So you guys can see on Tesla, right? The Tesla had this really strong retracement from this high down to this low, right? So we saw this candle followed by a gap down candle of a doji, followed then by a gap up candle where it left a gap between the doji. So that tells us that this is a bullish abandoned baby. With these abandoned baby formations, we are seeking the reversal of whatever trending move that we are currently making. So if we had this big, nasty downtrending move taking place on Tesla, and then you make a bullish abandoned baby at the support level, then there is a pretty high statistical probability that you want to long on the completion of that abandoned baby candle and look for a reversal back to the upside. And that's what we got here with Tesla, a really, really, really nice reversal, right? So pretty cool to see the abandoned baby there on Tesla that took place back in August 2 years ago. All right, so that's what a bullish abandoned baby looks like. Now, let's talk about TLT had the bullish one, not the bearish one. Did it have the bearish abandoned baby? I don't remember. Okay, yes, you can also kind of make the argument that TLT here, bonds, right, made a bearish abandoned baby with this candle here, the gap up candle here. Now, it's not exactly a doji, right? But then you get the gap down here, leaving a gap between the formation right there. So this, you could argue, is a bearish abandoned baby, leading to a reversal. Now, also very interesting, in this exact same formation of price action, if we just look over to our right, lo and behold, we have an evening star. So this is on the 2-day time frame. Okay. So look at this. All right. You get this candle here, and then you print a doji at this high here. The wick connects to this wick. So far, so good. And then you get the next candle that is bearish, and that wick also goes into the prior day. So this right here that I have circled in green is an evening star reversal, right? So you guys see this, right? You guys also see this, right? So you get the big green candle up, a doji where they're connected, and then the reversal red candle where they are also connected. All right. Very similar to what you actually see right here, right? So look at this, right? We head over to TLT, right? Candle, gap up sort of, but you kept the no gap in there, and then a gap down, tried to fill that gap, right? So you guys can kind of see the evening star versus what that abandoned baby looks like when you are speaking about the gaps and the difference between how those two structures actually look. All right. And then here's another grade A premium example right here as well, right? So you guys can see green candle up, doji candle here, red candle down. The wicks are all connected. There's no space between that. So that right there is a evening star bearish reversal formation. And then look at the reversal that took place from the high of that candle. Very nice, right? So that is the difference between a abandoned baby and the evening/morning star. All right. Doesn't matter if the doji candles in either formation are green or red. No, it does not matter. Nope. Just as long as they are doji candles. And they don't even necessarily have to be a doji. You just want to see like a tight body, like a tight candle that's similar to a doji. Those are normally good enough for those types of reversal patterns. Alrighty. All right. So, folks, I think that is probably going to do it for our candlestick lesson that we have done here live on stream. So if you found that lesson useful at all, or, you think that it was good, feel free to throw a GG or a TG or whatever into the chat box. And then I'm going to finish the last 25 minutes here going over some stocks really quickly. and using those very same candlestick formations that we just spoke about. So, yeah, hopefully you guys kind of found that useful. I don't know. I hope people found it useful. I mean, the truth of the matter is like, as much as I would love to give you guys plays and trades and all this other kind of stuff, like, the market is in a very dangerous place right now. And so the smart decision is to capitalize on some of those bigger time plays or trades that we've been looking at, whether it was the Snap Ghetto spread or Intel or Nike or Siri or, things like that, right? As much as I'd love to give you guys plays, like, it's just a very dangerous moment in time right now. So it just doesn't really benefit me to come on here and do these streams where we talk about price action on these stocks going up and down 1 penny. And then, the very next day, everything gaps down or gaps up a bazillion percent. Everybody, oh my God, what happened? Right. So I just think that right now, again, I want to continue to have these streams like really hyper focused on helping people, kind of grow their education. And I know that not everybody gives a shit about education and wants me to just hand them fucking plays. And again, there's no problem with that. Don't forget to tip your stonk waiter as always, but like, I don't want to be a little stock slut, like I want to actually help people kind of have the knowledge to do this stuff on their own. Right. So I don't know. I think that you guys appreciate it and like it. So. All right, let's get those Ichimokus off. Let's turn this back on. All right, so we can spend a decent majority of our time here at the end of the day just going over GME. I think for the most part, like with regards to the stock market, like SPY and whatnot, I think a big thing that we're kind of seeing take place right now is a large amount of, again, you're seeing lots up and lots down, right? But we're literally right where we closed on Friday. I think what's ultimately happening is people are just positioning for the big earnings that are happening on Wednesday and Thursday. So I don't really expect a large amount of volatility tomorrow or even Wednesday until the close. And then we'll get those big earnings to kind of kick us off, and then we'll kind of see, how the market goes from there. But seeing moves like this is very reminiscent of last Monday. You guys will remember. Yeah, so last Monday we started on that gap down, sold completely off, right? And then made a pretty decent recovery at the end of the day. And then for the next 4 days on the S&P 500, all we did was go straight up. So this is very reminiscent of that same Monday from last week. Maybe not as volatile, but great recovery, and things still look okay. So I have no major concerns about what we're seeing. But I want to get through those earnings first before I kind of start being, I'll say, aggressive on some of those trades that we're sort of looking at. All righty. All right, good. So, couple things to talk about with regards to GameStop here. So, let's treat everybody who stuck through that candlestick lesson, and let's give you guys a little bit of a treat on some good technical analysis and discussion on GME here. So one of the things that we've been looking at very carefully with GME, well, it's actually been a couple of things, but two specific things that we've really been monitoring is the Golden Cross, which still has yet to take place, but we are still above both moving averages, so not a ton to add to that perspective. But the next big thing that we've been paying attention to and spending a little bit more time kind of talking about, similar to what we did back over here in October and November, is the daily ADX on GME. So we spent a little bit of time talking about it last night, but I kind of wanted to go over this a little bit more to kind of make my feelings or opinions about this a little bit more well known. So the ADX on GME has once again risen today. You're creeping in on March 13th highs that we made, currently April 28th as I speak. So you're talking about a month and a half worth of the ADX staying underneath this level that we're currently at right now. And it does look like it is continuing to try and rise. Now, again, the big thing with this ADX DMI indicator is as this begins to rise, the dominant DMI, if it is the positive one that is above 25, as this continues to rise, you can see some very, 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 very significant movement from GameStop. How do I know this? Well, listen, because GME, right? If we just look over the last, here, let's just look since 2021. Okay, let's look at 2021. Let's turn off the DMIs and let's only focus on the ADX because what I'm about to show you is going to blow some people's fucking minds. Okay, so we're only looking at the ADX. Okay, there are very few moments since the sneeze, right? Dating back to 2021. There are very few moments dating back to 2021 where the ADX has spent multiple weeks, if not multiple months, underneath that 20 threshold. Right now, most recently, we broke the 20 threshold at the end of January, and we have stayed below it all the way till today, still. So you're talking about what? So February, March, April, 3 months, right? 3 months of staying underneath that 20 threshold. Now, if we just look over to the left, we can see the last time that we did it, we broke it on August 14th, and we didn't get back above hot coffee until November. So let's think about this. August, so September, October, November. Oh, hey, 3 months again. Whoa, that's kind of cool. 3 months. Then if we look over at the next most recent time, it was back here, January 23rd of 2024. And then the next time that we made warm coffee was April. So let's think about that. So January, February, March, or excuse me, sorry. It started in January. So my apologies. Just fucking chill out. All right. My apologies. So we started at the end of January, right? So you have February, March, April. When did this start? Oh, April. Interesting. So almost another 3 months again, right? 2 to 3 months. Seems to be the average. When the ADX dips below that 20 threshold, right? When it stays below there, right? You get about 2 or 3 months and then you see an explosion. Now, that explosion is not always positive, but again, I'll just keep going through these examples here, right? You know, you can see it didn't really spend a lot of time here, right? This was basically about a month's worth of time here. This was also about a month's worth of time here. Also about a month and a half's worth of time here. So I'm really looking at price action comparable to what we saw the ADX do here, currently, over here, and then you can also see over here, it dropped below in September 12th, 2022, kind of sort of got temporarily back above, but not really. It actually started getting back above at the end of December. So September, October, November, December, 3 months, right? So it seems to me like the maximum amount of time for the ADX to spend below 20 seems to be about that 3 month threshold. Right? It seems to be about that. And as we currently speak, January 29th is when we dip below 20. So that means all of February, all of March, and then all of April. Well, it's April 28th today. So that would be 3 months. So that would kind of imply, you know, again, just based on prior price action and what we have kind of seen take place on GME since the sneeze, 3 months tends to be the threshold. In fact, if we just do the math ourselves, every single one of these has been shorter. Right? With the exception of this one that happened, started August 14th and then ended November 6th. So August, so then you get September, October, and November, right? So technically speaking, they're almost identical right now. And then if we look at this one that looks kind of spooky, April 7th, that was till May 28th. So April to May. So that gives you 2 months. So the threshold that we have seen on the daily since the sneeze has been 3 months maximum. And we're at 3 months as I speak into this fucking stupid idiot microphone right fucking now. So common sense would kind of dictate that we're probably going to see a pretty significant explosion soon, right? But hold on a second. Don't we have a fib time zone that we're going through on? What? Whoa! A fib time zone aligning with technical analysis? Say it ain't so! I was told technical analysis doesn't work on manipulated stocks. Anyways. Yep, squirrel, stay on target. That's right, squirrel. Anyways, So 3 months, right? 3 months seems to be kind of the threshold for those moves to take place. And we're at month 3. And then we have that pivot zone that we're going through, the fib time zone, on Wednesday. And then we also start thinking about something else, right? We also start thinking about something else. Let's see how many people will remember this. April, May, June. Every single year since the sneeze, 2021, 2022, 2023, 2024, and soon to be 2025, GME has had significant runs on the share price. Whether it's April, whether it's May, whether it's June, doesn't fucking matter. That's when they typically happen. So hold on. Let me see if I have this correct now. So the ADX is giving us a signal, one of the longest signals it's ever printed. Then you have price action also printing us a signal, breaking above the daily 200 and the daily 50 and the macro point of control. Okay. And then we have the pivot zone on the fib time. What? Okay. And then we have the confirmation that every single year since 2020, GME has run in April, May, or June. And we're currently about to enter into May. Huh. Oh, okay. So let's take a moment to pause here, right? Let's open up our ADX DMI indicator again, and let's see what happened every single time where we spent 3 months, 2 to 3 months below the 20 threshold and then made a breakout. So let's mark off this breakout here. Okay. Let's mark off this breakout here. Let's mark off this breakout here. And then let's obviously mark off this breakout here. Now, this is the squeeze. Like, this is the start of the sneeze, so don't worry about this. So let's look at all 4 of those yellow lines, and let's see what we see. Okay, so the very first one, going back May 2021, GME was already in the midst of a squeeze. You guys will remember this. We've looked at this area of price action. Then GME went up an additional 50%. Very legal, very cool from the moment that hot coffee sign started to be created after the 3-month-long period of doing nothing. Then we go to the next one. All right. So we were making cold coffee and cold coffee and cold coffee, and then it starts to make warm coffee, right? And we see a little bit of a retracement. And then you'll see the DMI positive flips in this period of time right here. And then look at the strength of the move that was made right there. A nice 61% on GME. So not only did you see a 22 to 23% move down, but then you followed that up with a 63% move to the upside. So it sounds to me like that hot coffee and the multiple weeks of consolidation with really low ADX leads to a large amount of volatility that you can make money on. Okay. The third time, well, I don't have to be the one to share with you guys what happened the third time. Because, I mean, fucking cook their ass. Good times. And then the fourth time, right? We just did this one. We literally just did this one, and we spoke about this recently. Right? And this is where GME had that really nice solid 55% run when you started to make that hot coffee, right? So you guys can see that the 4 times that we have done this since the sneeze have led to 50% moves or greater on every single one of those yellow vertical lines. Took a little bit of time after the vertical line hit, but when it did, it led to very significant volatility and very significant explosions in price action. Right? Now, of those times where this has occurred, there has only been 2 examples where the DMI positive has been above the DMI negative when those crosses have occurred. All right? The first one was this one with that 50% continuation move that we saw right back here. And then the next one was this one back here where we caught that 70% move off of those lows from 20 or whatever, right? Those right there are the only 2 times where we've had the DMI positive in the hot coffee territory while the DMI negative was down when that ADX cross happened. Wow, SPY, huge fucking ripper. SPY, fat fucking ripper, folks. So when we consider that, right, and we know that both of those times it led to an over 50% move in the share price, what's going to happen if the ADX continues to rise like it has been, and we start to make warm to hot coffee as our DMI positive for the third time since the sneeze is above the hot coffee territory as that ADX begins to rise, what would a 50% move from this range potentially look like? Well, first of all, you're talking about 40 from where price action currently is. And then if we did see it come back to the point of control before that rocket launch took place, you're still talking about this reaching $39. That's super cracked and super exciting because you are beginning to see a specific indicator where we have now make sure you listen to this part carefully. We just built a trading strategy using the ADX indicator. And the only other two times that we have historically since the sneeze on this chart done exactly what we're doing right now, it led to 50% moves in the share price. Now, I also don't have to be the first one to share with you that if GME gets to $39 to $40, we bought it in 2080. You're talking about an 87 to a 100% gain. Ah! That's exciting. It's really exciting. And look at how good it looks. Right now, let's go and focus in on that. Shut up, Jackie. Let's talk about those candlesticks, right? So we see a doji at the top of a trend. I don't love it, but I also don't hate it because we haven't really done anything. I see a giant bearish piercing candle, right? Or / dark cloud cover. Also don't love that, right? Two potential reversal candlestick formations taking place. But what if we close at the high today? Couldn't that be a hammer candle, right? Where we take the profit target like this. We put it at the top of that candle, and couldn't that get us right back to potentially like $28? Whoa. And could we defeat this bearish dark cloud cover? Could we fill that gap? Can we get to that golden pocket? Well, the faster that this motherfucker goes boom, 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 the better the GME is going to perform. And it looks damn good. Damn good. Damn, boy, that's a thick-ass boy. But if RTY and IWM continue to find some support and push off and make some healthy movements, GME has the potential to make the breakout from that ADX indicator and see a really significant move, you guys. And this is the exciting part about trading and education, where you guys get to use all of these indicators and all of these things that we have spoken about to help you have the confidence to trade GameStop with success. And with that, I am incredibly thankful for all of you guys that tune in to these shows daily when we are live on the stream. Very, very thankful for all of you guys that show up. Also thankful for all of the super chats and the gifted memberships, which I got to say thank you for. I got to get my phone. I'm not signing off yet. We're going to stay on for the last 5 minutes here. Oh. I just got to open up the old YouTube. And then I got to watch Vegas Matt. All right, so we had Thomas Johnson. It's a Johnson. With the $20 bomb. Thanks a lot, buddy. We had Bulls 101 with the 20. It says, you deserve more, my man. Thanks for doing what you're doing. I appreciate that. Thanks a lot. Cartel At the start of the lesson, I thought, this stuff is easy. Then I realized it's easy for me now because Jackie taught me this. This time last year, I couldn't tell a doji from a bull flag. Thank you, bro. Good job, man. That's awesome. Devin Toops, hey, don't we usually squeeze on a Wednesday? You stop it. Then we had Dijon Mustard with the D's Nuts 5 gifted memberships. Thank you, good sir. Thank you, good sir. And Devin Toops joined Jackie Jacked. Oh, he's a legend, Devin Toops. And Justin Moop, just in time with the 5 gifted memberships. Legend. Oh, there's no name. I see no name with the no comment. Now we just need to find Timmy Peps. We need to find Timmy Peps. So, all right, let's finish off the last 3 minutes of the day with just this really quick conversation, right? So, I like finding plays as much as the next one. I have shorted a couple of things and made some money. I've shorted a couple of things, got burned on. Longed a couple of things, made some money. Longed a couple of things, got burned on some of the things, right? But as it stands right now, right, the market is in a very strange place. There's a lot of people that are sitting on the sidelines, unsure about what is going to happen with the stock market and what is happening with their investments. Because of that, there's a large number of people that are not participating. Now, I'm not talking about the Discord or in the YouTube or anything like that. I'm just speaking in generalities here. There's just a large number of people that are not participating because the market conditions, just as of right now, are very spooky for the average person. Right? You think about buying something, the next day it's down 20%, and then you sell it, and then the next day it's up 40%. Like, that's the whipsaw that we have seen kind of from the market recently, right? So I want people to understand it's not that we're not looking for trades, and it's not that we're not looking for plays, right? But I'm not one of these guys that goes on to the market, screens for the biggest moving stocks of the days, and then tries to continue to trade it up, right? Now, again, there's nothing wrong with that. If you guys trade that way, cool. It's just not my style, right? And so the way that I teach people and the way that I educate people, it's just not what I do, and it's not what I excel at. So it's just not the type of trading that I will go out of my way to try and do, all right? Now, having said that, it's not that there hasn't been some trades and plays and opportunities in the meantime, but those trades and plays, when those opportunities happen, one, you have to execute really, really quickly, and two, you got to be on the ball to make sure that you're listening to catch some of those trades, right? Whether they were Intel or Nike or Siri or Snapchat ghetto spread or the Tesla ghetto spread or, when you guys jumped in on Wolf at the lows or Chewy at the daily 200 or Unity on that shark completion or whatever it happens to be, right? It's not that we're not looking for plays, and it's not that I don't want to identify plays. I want you guys to understand that a lot of the people that follow this channel and this page and what we do here, right, are relatively new to trading. So I would be doing a disservice to folks, right, by actively looking at trades that are only going to last for like a few hours, if not a day or two. And then those things only go up like 3%. And some people are locking in some good profits while other people are like higher, higher, higher. And then it goes down and then they lose their money. And right. So for me right now, my focus was that Wednesday from when Trump announced all that silly tariff stuff. Right, the 2 Wednesdays ago where we had that crazy fucking ripperino and things went absolutely fucking bananas, right? I longed a couple of things from that day. And outside of that, I have really not traded a whole ton of things because I have not seen a ton of opportunity. It's not to say that everything is fucked or that it's cooked or we're just in a very awkward moment of time where there's so much uncertainty about everything taking place right now, right? So I just want people to understand that it's not that we're not looking for trades or that we're not looking for plays or that, we're looking for reasons not to trade, right? It has nothing to do with that. The focus right now is for people to make sure that they hold onto their cash for the best opportunities, right? That's what I'm looking for, is the best opportunities. Those best opportunities, in my opinion, have not presented themselves yet because I want the market to prove it's making a bottom. right? The SPY having a bearish death cross and no bullish divergence that propelled us out of this range while barely limping its dick above the center line is not exactly a number one reason to think that we have made a complete and total bullish reversal of this bearish move that we have had to start this year, right? So I need to see more signs and symptoms of life from the market before I kind of start getting really aggressive with the plays and the trades that we're looking at, because this range of price action is not the same as what we had been trading for the last 2 calendar years. It's just not the same. So you need to be protective and cautious at every single turn, and not because you don't want to make money or because you're acting afraid. It has nothing to do with that. Your focus needs to be on having caution so that you aren't buying at resistance points before these stocks make big turns around to the downs. And again, I'm not saying that it's going to, but if you buy at resistance because you think the recovery is done, right, and we're going to keep just breaking out and everything's fine, if you buy here and then this thing goes here, 2 things happen. Number one, you no longer have money to buy at this low. And number 2, now you're bag holding down X% on whatever stock it is that you're holding, right? So for me, I need to see signs and symptoms, reason for us to make those breakouts, right? And to have that bottom formed. And I don't see it yet. We haven't broken the golden pocket. We haven't tested that death cross. We're printing dojis at the highs now, right? So I'm extremely cautious. And I hope that caution continues to kind of feed you guys in your approach to the stock market right now, because I know one thing, and I know this for sure. When the market has been like this over the last 3 weeks, yes, it's been an absolute joy for those of you that are trading. But for those of you that have not been trading, and for those of you that maybe are learning or are just kind of getting into it, or like more of like the swing or the longer term trades, this has been an incredibly, incredibly difficult moment of the last 3 weeks. So I want to make sure that people understand, right, that during these periods of times, we are just being cautious and patient. That caution and that patience will pay off in a significant way, whether that's the market testing that death cross and then continuing to die, or whether that's the market making a breakout from these lows that we had at 481. It doesn't matter. The focus now is, are we getting the recovery, or are we still in a bearish kind of downtrending, recession type of market? So we take advantage of the moves when they give us those moves, right? But we are not ultra aggressive, at least not yet. And when the moment calls for it, we will be. But until then, we want to continue to just sit back, be watchful, be patient, and let those opportunities come to us. All right. So that's what I wanted to finish today's show off with, guys. So if you had fun today, if you enjoyed the stream, send in a GG or a TG into the chat box. And we're looking forward to Wednesday and Thursday's crazy earnings and hopefully crazy movement in the stock market. And yes, some of you guys did make a note to say GME did print a bullish hammer formation at the end of the day. That is correct. So you measure that candle. Take that to the top, and there you go. So profit target on that would take you right back to $28 if that is a hammer reverse there. So very interesting, folks. Very interesting. So once again, thank you guys all for tuning in. As always, really appreciate all your guys' support and whatnot. I know that the market has been a fucking turd lately, and I know it's been really shitty and sucky and boring to watch and whatever else. But guys, it won't last forever. So thank you all very much for tuning in. As always, I really do appreciate you guys being here and listening to those educational streams. And I will see you guys tonight for a stream. Probably not, because we didn't really do very much today. So maybe chat with some of you guys in the Discord. But outside of that, yeah. All right. So thank you guys very much. Appreciate your guys' time. Canadians, get out there and vote. Doesn't matter who you're voting for. I don't care if you vote for PP. I don't care if you vote for Carney. Vote for whoever you fucking want to, but at least get out and vote. Because if you don't vote, I don't want to hear you bitch about your guy not winning. So go out and vote and make a difference. So thank you guys for tuning in. Appreciate your time, and we're going to see you later. Thank you. Bye now.